the time for you to worry is 50 years from now, when all the money in the world is Bitcoin, when Bitcoin is 450 trillion and it's worth, go figure, $50 million a coin, and then the currency of the country you live in is backed by Bitcoin, then you might see that what'll happen? The more likely thing is that currency, the whatever yo-yo dollar, will be pegged to Bitcoin, and then someone will take over the government and said, hey, we're going off the Bitcoin standard. They would sell everything else. If they seized $1 billion of Apple stock or Microsoft or your building or your sports team or your Picassos or your Leonardo da Vinci's or your diamonds or your silver or your gold, they'd sell it. But you do not sell your Bitcoin. Why is that? Because Bitcoin is the most scarce, desirable property in the universe, right? It's global capital. And if you want it, why wouldn't you do it? Because it's the best thing to own forever. But why else wouldn't you do it? Because if people do stop using bonds or sovereign debt as a long-term treasury asset, what's the next best thing they're going to go to? Well, the logical next thing to go to is Bitcoin.
Saylor begins by emphasizing Bitcoin's unique standing as a form of capital that isn't influenced by any single nation, state, or individual, making it distinct from traditional assets like real estate, stocks, or even commodities like gold. He points out that while the US dollar was once pegged to gold, it has since evolved, unbinding itself from that standard. Similarly, the dollar is not pegged to assets like New York real estate, Apple stock, or sports franchises. Bitcoin, he explains, is not reliant on such pegs. It stands alone as a unique form of digital property. The comparison he draws is simple but compelling. Bitcoin is akin to owning prime real estate like Manhattan, but in a digital realm, an asset of limited supply with only 21 million coins ever to exist.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Yeah, sometimes people think that, but what they're missing is in 1933, the US dollar was pegged to gold, right? It was $20 per ounce. And so the US dollar is not pegged to commercial real estate in New York City. And the US dollar is not pegged to Apple stock. And the US dollar is not pegged to Bitcoin. And the US dollar is not pegged to the value of your sports team. So if the US dollar was pegged to something, then of course it becomes very political. And what happened after that act was the US devalued the dollar from $20 to an ounce to $34 to an ounce. So that was all about getting off the gold standard, right? There is no Bitcoin standard. So the time for you to worry is 50 years from now, when all the money in the world is Bitcoin, when Bitcoin is 450 trillion and it's worth, go figure, $50 million a coin, and then the currency of the country you live in is backed by Bitcoin, then you might see that what'll happen? The more likely thing is that currency, the whatever yo-yo dollar, will be pegged to Bitcoin, and then someone will take over the government and said, hey, we're going off the Bitcoin standard. But they're not going to get rid of Bitcoin. But if you do that, if you go to Bitcoin treasuries, you'll see that 95% of the Bitcoin isn't in these ETFs. 20 for every dollar of Bitcoin in the ETF, $19 is not in the ETF. So Bitcoin is already a global asset outside the control of any nation state or any company or any actor. And that's what makes it so special. And if you think of it as property, it's no more risky for a New Yorker to buy $100 million of Bitcoin than it is for a New Yorker to buy $100 million worth of warehouse space in Manhattan, right? No one walks around New York saying, oh my God, the government's going to seize my warehouse space because they want to devalue the dollar. You're like, well, are you kidding? The government isn't backing the dollar on warehouse space in Manhattan. So it's just a piece of property that you're holding for long-term capital preservation. And where you're going to get yourself in trouble is if you don't pay taxes on your warehouse space in New York City, or if you want to transfer $100 million worth of Apple stock to somebody in Africa and you don't want to talk about who you sent it to, right? Right. But those are problems that people that have $900 trillion worth of assets have today already. We're not going to change the politics or the geopolitics of the world here. What we're doing is giving people a better investment than Google. That's the point. Well, I mean, I think what's clear here is the Overton window is shifting. 4 years ago, the question was, is the government going to ban Bitcoin? And 4 years go by, and now the discussion is, how much Bitcoin should the government own, or buy, and should they buy more, right? That's a major shift, right, for people that are paying attention. I'll note, right, what Senator Lummis said is we should accumulate a strategic Bitcoin reserve. What RFK said is I think we should acquire 4 million Bitcoin. And what Trump said was, we will not sell our Bitcoin. Okay, so if you look at the United States and say, what is it the United States won't sell? They won't sell their national parks. They won't sell their nuclear stockpiles. And they won't sell their Bitcoin. They would sell everything else. If they seized $1 billion of Apple stock or Microsoft or your building or your sports team or your Picassos or your Leonardo da Vinci's or your diamonds or your silver or your gold, they'd sell it. But you do not sell your Bitcoin. Why is that? Because Bitcoin is the most scarce, desirable property in the universe, right? It's global capital. And if you want it, why wouldn't you do it? Because it's the best thing to own forever. But why else wouldn't you do it? Because if people do stop using bonds or sovereign debt as a long-term treasury asset, what's the next best thing they're going to go to? Well, the logical next thing to go to is Bitcoin. And so the competitor to holding bonds as the global capital asset is Bitcoin. So the smartest thing you could do to support the US dollar is simply buy 20% of the thing that everybody might one day switch to before they get there. It's kind of like the US buying Louisiana territory or buying Alaska, or just, if you have Virginia and the Eastern colonies, you might as well get the rest of the nation, because if people go west, wouldn't you want to own the place they're going to go to? I mean, that was generally the idea, so Bitcoin represents the next financial frontier. You ought to buy it because it's a smart investment, but you should also just buy it because if people lose faith in all your other instruments, that's where they're going to go, and you might as well be there and put your flag there before they get there, because that way you win no matter what happens.
Saylor describes Bitcoin as the ultimate form of digital real estate, Manhattan in cyberspace. He asserts that while there are other digital assets with various applications like NFTs or meme coins, these are speculative and serve different purposes than Bitcoin. Bitcoin's core strength, he argues, is its function as an unchanging finite resource that provides unmatched security and predictability. Saylor views Bitcoin as an asset that should be held for generations, much like land in a prime city. Those who recognize its value now have the opportunity to secure a position in what he believes will become the global reserve asset of the future.
Bitcoin's the crypto asset that has unambiguous regulatory clarity and global consensus everywhere in the world as a commodity, as an asset, and it has the most certainty, not just in the crypto universe, right? In the financial universe. If you're looking out 100 years and you're buying Bitcoin, you want to buy 1/21 millionth of all the money on the network. And you want people to acknowledge that, oh, I just bought this because I want to hold one block out of 21 million blocks at Manhattan in cyberspace. And so think of Bitcoin as Manhattan in cyberspace. There's a lot of other places you can live. There's a lot of other cities than Manhattan. And there's a lot of other businesses. I don't think that the liquidity or the capital that's being invested in meme coins is going to either drive the Bitcoin bull run or it's threatening. It's kind of like, is Manhattan threatened by what goes on in Vegas? Not really. I mean, there are different things going on. And I think with regard to all the other crypto use cases, right? Whether it's a DeFi network or a digital currency network or a meme coin or an NFT or whatever. All those things, they're different applications. They meet the needs of different investors. They have different regulatory issues. Last week, MicroStrategy raised, $1 billion in a convertible bond issue. We put not quite half of it into Bitcoin. And then the week before, we raised more than $1 billion in equity we sold in the capital markets. And BlackRock has basically raised 20 billion plus and put it into Bitcoin via IBIT. That money is flowing from people with hundreds of trillions of dollars, and they're making the decision to buy some Bitcoin-backed instrument or own a bond or own a building or own a portfolio of Magnificent Seven stocks. And so the thing that's going to drive Bitcoin is going to be traditional money held by institutions, high net worth individuals, and corporations. When Google has billions of dollars a month and they either buy some bonds or they buy their stock back or they buy Bitcoin, right? They're just looking for capital preservation. So Bitcoin's very straightforward. These other things, right? They have their own thing, right? I will acknowledge people like all these other things, right? And they're all interesting. And let's say gambling. People like to gamble. And if you gamble on an Indian reservation or you gamble in Vegas, maybe you make a lot of money and have a lot of fun. But if you do online gambling, it did get banned and some guys got arrested for it because they crossed, a bright line. And so sometimes, some places you're allowed to do it, other places you're not allowed to do it. It would take a lot more than a few minutes to cover all the nuances of it. I think that you have to think very carefully about what kind of investor are you and what kind of investment are you making. I think Bitcoin's going to be a beneficiary of whatever happens November 5th, because after November 5th, there'll be more regulatory clarity about what happens next. And I think the results range from good to great, right? I think that there's a lot of other questions that'll be decided November 5th where there are good and bad outcomes, but because it's a very complicated situation. But I think with Bitcoin, time is on our side. I think that Bitcoin is again, it's a new digital capital asset. And after November 5th, we'll have clarity about it. So I think Bitcoin is going to be a winner no matter what. And if you were asking me for a good investment idea that benefits in the fourth quarter, I think Bitcoin is a beneficiary in the fourth quarter no matter what happens.
Michael Saylor's insight into Bitcoin offers a fascinating glimpse into the potential future of global finance. With its unparalleled scarcity, clear regulatory status, and increasing institutional support, Bitcoin stands as a unique asset that combines the best features of traditional investments with the advantages of a decentralized digital framework. For anyone looking to secure long-term capital in a world of financial uncertainty, Bitcoin might just be the most compelling option available. If you found this breakdown insightful, don't forget to like, subscribe, and share your thoughts in the comments. Stay tuned for more expert analysis on Bitcoin and the future of finance.
Please like and subscribe my channel.